earnings reports, of course. So the eyes is pretty much on the US data, especially the inflation after we had after we have seen the NFP, and also today after today quite I think it's in 3 hours from now, maybe I'm mistaken. We have FOMC minutes that will take place. That should be, yes, another 5 hours. So uh, all the attention has been shifted today into the inflation data and to the FOMC minutes, which are less than 6 hours away. So it will be tonight, more precisely. So we have seen a lot of cautious trading ahead of the data today. So let me just double check that. Okay, 4 people are here, so I guess we are right. We're okay. So before I share my screen, I would like to show you the calendar as usual, just to see what is expected. Since we are less than 5 minutes away from the data. So let me quickly share the calendar with you. As you can see, inflation for September is expected. So, um, as I was telling you, inflation is the key. It's what the traders today are focusing on. So it is expected that September. Can you see that? Let me double check. Yes, you can. Perfect. Just remove the caption. So September inflation from US is expected to rise at 0.3% on the month, and with the core rate edging 0.2%. This is the one that you can see that we mean the core. Core, we mean excluding food and energy. So the core is expected at 0.2%. So it's higher than August results. So any results that we'll get today and they are in line with the expectations, with the forecast, should see the headline rate decelerating a bit, slightly to 5.2%, rather than the 5.3% that we have seen previously. So any result that is in line with expectations should slow down the headline rate, okay? While the inflation, including food and energy components, should remain unchanged. So, why inflation is key is because we have faced these widespread production bottlenecks. So these are lifting all the inflation metrics for the rest of the year for 2021, alongside with the yearly figures. This will present how the production bottlenecks affected inflation. So energy prices, this rising energy prices should remain in the spotlight, especially with further gains in oil, coal, gasoline, and etc. So monitoring the inflation could give us the uh, the length of how bad the damage is, pretty much in simple terms. So let's get back to the markets. And let me check whether you are all here so I can see some questions. Hi. Okay, let me change and share the MT4 window. Cool. Okay. I'm afraid this is not a question. I don't know whether it's a question, but definitely I cannot reply to buy or sell. Just a generic buy and sell. Alfred, I'm good, thank you, and you. So, okay, we have seen a lot of cautiousness ahead of the inflation. So for I will start until we are just a minute away from the data anyway. But as you can see, this is the USA 30 in a 1 hour chart. So in general, because the market reacted a bit cautiously ahead of the data, so we have seen a lot of narrow and a lot of sideways movements so far today. So after the data, this is likely to be changed. So USA 30 over here, after rallying slightly, rebounding slightly from the Asia session, we have seen that it has been sustained a sideways move for the last 4 hours. The same stands for all the US majors and European stocks as well. So as you can see, USA 30 1 hour chart, you can see how dodgy these hourly candles are ahead of the data. But in the long term, you can see these lower highs and lower highs that they're presenting an overall asset that is under an overall outlook, that an overall negative outlook. So the US stocks are pretty much under pressure. The same stands as I was telling you for the European stocks. So actually data should be out. US September consumer price index increased to 0.3%. So let me just shift again to the calendar. Okay. And, okay, the data are out, guys. So let me shift to dollar to see the response of dollar. Okay. So this is okay. All right. Okay, cool. So rising inflation, it seems. So we have seen that the data came higher than expected, 0.4% against the 0.3 expected. Inflation, non-seasonally adjusted one, very close with expectation, the non-seasonal adjusted one. The core one indeed appreciated to 0.2% growth from the 0.1% seen in August. So an overall rising inflation. This is what we are getting from today's data. A positive, an overall a bit of expectation. So U.S. annual inflation edged higher. So you said you remember earlier I said that if they came in line with expectation, that should had increased the yearly basis. But now they came in actually higher than expected, so they have boosted the annual rate to 5.4% on a yearly basis September before the 5.3%. So let me just check the newsfeed to see whether we have anything else. So dollar reacted positively, rebounded, extending higher for the time being. Okay, we're in this is a 30 minutes chart. So if I just zoom out, extending away from the 94.20, that was the support being sustained for 2 days in a row, wasn't it? Yep, and 3 days in a row actually. So rebounded, extends higher, currently at 94.38. Let me see, I'm trying to monitor the newsfeed to see the breakout. So excluding food. So, okay, prior rating was at 0.3%. Let me just check again the calendar, guys. Well, there's no revision over here. Okay. So was lowest since Fed, core at 0.3. So 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 dollar is higher on this higher headline, but it's likely to be the let me just okay, give me a second, guys, just to see what's going on over here. Consumer, perfect. Okay, let's check the breakdown. As I'm reading over here, okay, everything beat expectation, and even though they were really close to the expectations, but dollars, as you can see, as you anyway can see, is higher on the higher inflation, but it's likely this respond to be more of a related to the strong wages number than the actual inflation. as you know, you might know, the wage growth is the real crux of inflation. So that's something that was also evident back in the NFP that we saw last Friday, was it? Yeah, last Friday. So um, okay, just. Okay, so far it looks that dollar is in line with the reaction of dollar is in line with the reading. So already reached 94.45. Next support area, resistance area, sorry, remains the peak that we have seen yesterday at 94.50. Let me put the line on. 94.50, and since now we are pretty much in the noise of the market, okay, so we need to wait a bit to see the markets calming down. I'll get back to the questions because I saw something very interesting. So it was a question from Emmanuel: how will the inflation data affect gold? I'm afraid okay, I'm not sure whether you are asking in regards to intraday, but in general, the gold is affected by what's going on in the yields. Okay, so have in mind that the reason why we have seen. So let's shift to gold. Okay, you might asking intraday. I'm not sure whether manual that's the case, but I will start from the medium term outlook, the long term outlook. Actually, as you know, gold is a non-yielding asset. Okay, so it's in a less favorable position due to the rise that we're seeing in yield. So people actually shifting attention to the yield, investing in the yield. And that's why we've seen a bit of a low activity in gold. Also, we have seen, if you notice, for 9 days in a row, holding, sustaining a sideways movement between 1750 and 1770, 1780 more precisely territory. The reason why is that is because from the one hand we have the Fed, and from the other hand we have the yields as well. Rising yields negatively affected the gold, but also we have expectations for the Fed. So markets are really expecting the Fed to proceed to a quantitative easing tapering early 2022, and the rate hikes to move on to the end of 2022 or even 2023. So there is like a big opposition, and that is keeping the gold in like directionless. Okay, so but now in the response on the data, of course, it was a pull back down on the stronger dollar. So that's a clear response due to the jump that we have seen in the dollar. So so let me know if you need something else, Emmanuel. If I don't really understood the question. Your question, and you want me to further extend my analysis, fundamental analysis in regards to gold. So, okay. Oops. So let's move on. Growth will help depth issue according. Okay, according I have a headline in our Bloomberg TV over here from Fed may start later. So yes, indeed, the rising inflation is not something that the central banks are really hoping for, but it's the vice versa. The rising inflation is something that it suggests that is something that could push the Fed to sustain the current policy for longer than what they were initially expected. Okay, so Actually, it was initially expected that the September inflation report should reveal a more moderate inflation and PPI gains, and a bit of a growth, solid growth on imports and exports. So the reading today wasn't ideal for the Fed, especially after that the NFP last Friday. So, and we are nearly less than a month away from the Fed meeting. So, the minutes later on will help further on how the members of the FOMC, what the members of the FOMC hoping to, how they were hoping to proceed from now onwards. So we're gonna see the statements of the individuals, of the members of the Fed. So let me just. So. Okay, guys. Let me check whether there is anything that it worth mentioning before we start our technical analysis. So, to be honest, nothing really changed in regards to the key factors that are driving the market in October. So keep in mind everything that we keep mentioning since the beginning of the fourth quarter, and actually earlier than that. You need to keep an eye on the rising energy prices, keep an eye on the yields, the rising yields, keep an eye on the supply chain disruption. So these are actually moving the market and affecting the medium and long term outlook of the market. So why the dollar has been trading generally soft today, for example, at least so far, before actually prior the data, has to do with the heavy tone that we have seen yesterday from the 10-year Treasury yields, which actually sank back under 1.57% after they rise above 1.59%. That was around 24 points above previous auctions. So that is why we have seen a bit of a dollar easing prior to the data. So, but anyway, as you can see over here, it has reversed nearly all the losses that we have seen since yesterday afternoon, from the 94.50 peak down to 94.20. So I will shift back to your questions. And let's start the analysis, even though we are in the middle of the noise um, of the data. So Euro Oz, John Mav is asking. Okay, John. So Euro Oz, here it is. So we'll start. Okay, it will be helpful if you're interested in particular time frame. Let me know. So right next to your comment, also the time frame. Otherwise, I will do whatever I do every single time, starting from the higher time frame and going to lower to the intraday analysis. So, dear John, as you can see, Euro Oz has been one of the least favorable. Not actually, it has been favorable, but it wasn't one of the least beneficiary assets, as it has been declined for actually 2 weeks in a row. So in September, October, the asset has seen a continuous decline. And if I zoom out, you can see that it has something similar to what I have seen in euro dollar as well. So if you notice, it's not so visible, it's not easily visible at least, but this looks like a head and shoulder, but not a normal head and shoulder, an ascending head and shoulder. So by applying the neckline of a head and shoulder, you can see that indeed. So if I just more precise over here. So you can see that the it broke the neckline of Head and Shoulder, which is a bearish pattern. Okay, back in the 4th of October, so 9 days ago, and it kept extending lower since then, even breaking the 200-day moving average. So it's in an overall negative outlook. MACD extending lower, aggressively lower. You can see how it keeps extending lines and below the zero, the neutral level. RSI also flirting with the 30 level barrier. So, but slowing down. You can see if you connect the peaks of the RSI, you are getting the decline, the decreasing of the this declining, this low, this downwards move, and the turn into further selling. So the overall outlook remains negative for the asset, and from now onwards, the support level, the next support level for the asset, is on the lower Bollinger Band area, so down to 155.80. So let me put this in a yellow line, much better visible now. So okay, so now next support level 155.80, while the near term one holds at yesterday's bottom at 0.5645. So let's zoom in and see the intraday picture. So the intraday picture, the asset tried to recover some of the gains but failed twice. So 157.50 was an area retested several times since the whole week, but the asset kept failing to break above that level, above that key resistance area. Remains, however, to the upside. So once again rebounded earlier. So on the data release, rebounded and is currently at 1.5740. So 157.55 remains an immediate resistance area for the asset DR John. So if I just go down to my 30-minute chart to see the fast moving average and the momentum indicators, I can see the fast moving average I have barely bullishly crossed, implying that there is some steam to the upside. So there is some buying pressure to the buying pressure for euros in the very, very short time frame. RSI extended higher and pointing higher. MACD provides some mixed signals. It has flattened a bit. The histogram and signal line have clashed, indicating a bit of a mixed signals over here. However, what bothers me is really the stochastic. So we have a very confusing signals from our indicators. So RSI rising, MACD very neutral, while stochastic has topped and is turning lower, ready to post some kind of a bearish cross over here. You can see that bullish cross. This is a fast trying to cross above the slow line. It seems that there is still some steam to the upside in the very, very short time frame. So attention on the 157.55 or even the 200 period moving average that is set at 157.60. That's the very, very short time frame, dear John. A lot of gold questions. Okay, I will get back to gold, guys. is still wholesale in euro. Anyway, the Yogi, um, neither the technicals, neither the fundamentals in the medium and long term support the euro, because let's not forget that the yield differentials are on the favorable, the favorable for the US in the from the US side. US growth is it has presented so far and is expected to keep presenting higher growth rate than eurozone. Euros than the growth rate that eurozone is presenting. So just think it as simple as you can. If one country is growing in a higher rate from another, so that impacts the currency of the country with the same exact way. Okay, so neither of the fundamentals are positive for euro if we compare it with US. So if I go back to the euro dollar, okay, in the long term, you can see that this very, very similar to what I show you in euros, and ascending head and shoulders, breaking the ascending neckline and extending lower. So what we have seen in euro Oz is that it has sustained pretty much similar to euro Oz, pretty much the same bearish outlook in the long term. Broken the neckline, broken the 200 period moving average, extending lower. So the next, in the long term, of course, it is in the long term. I remind you, this is a weekly chart. Support lies on 113 level in the long term for euro dollar. So, yeah, euro is under pressure, dear Yogi. Trying to check my news feed as well to see whether there is anything else. Let me check. So since you mentioned euro, let's see the 1 hour chart in this euro dollar asset. So on the stronger euro, we have seen a pullback of euro dollar over here down to 115. Let me just check. 1536, bottom on the announcement at 11536. That was after the data. So inflationary fears pretty much increasing. So definitely the data haven't eased, they haven't calmed down the markets, but they make the markets even more anxious than before, because this is what we were all fear about: the rising inflation. Rising inflation seems to be the hot topic of the year, actually for the years ahead, to be more precise, um, especially with rising energy prices. So euro dollar turn lower, a big pullback over here. Still haven't get confirmation from our momentum indicators in regards to further decline of the euro dollar. Fast MAs still haven't provided any bearish signs so far. RSI dipped aggressively, stochastic the same. So if it depends of how this candle will close. Actually, it will close in less than 7 minutes. If I zoom out to the 30 minutes chart, we can see that it actually provided a cross, so actually broken the lower Bollinger, so moved outside Bollingers. Fast MA is already bearishly crossed. So the next immediate support level for the asset is being held up there at yesterday's bottom, pretty much the 115.27 down to 115.24 level. So this is the next support level for euro Oz in the short term. Let me clear a bit this mess. So So long term intraday in the long term, and in the intraday picture, we can see that the downside pressure is being sustained. So immediate support 115.20 area for the day. And I haven't used my pivot points, but okay, it will, don't worry. So it doesn't matter. So all these rebounds that we have seen intraday, it looks to be just correction. If you if you if you closely monitor the charts, you can see that it's keep posting lower highs, something that implies that these corrections these rebounds are just corrections. Excuse me. On this long decline that we've seen, long term decline that we've seen from euro dollar. So that was it. Let me, wage pressure leaves the US dollar. Okay, it's a headline that I can see in my newsfeed. Sorry. Um, so on the breakout, okay, I found, what is this? Yeah, it's the breakdown of the report provided by someone over here. So yeah, what was actually what was important from this event, from this report, other than the overall rise, it was the wages. So the surprise came on the wages. This what has driven the rise in inflation, in the overall inflation. If you find out the breakout of the report, you can see that what affected and provided a climb to the inflation was the wages, which rose 0.8% in the month, in a sharp acceleration from the 0.3% climb a month earlier. So this would be a key ingredient in the potential wage growth. Um, okay. So this is actually presenting that apparently the jobs that they have low wages are declining. Okay, this is what that represents. This is due to the latest wave that we have from the pandemic. So the latest wave that we have pandemic has may have skewed the data and lead to low wage jobs decline. So so we have done with the data analysis. Let's shift back to the market, and at this point, let me just bring. I'm not sure whether we have it over here. Shall we see a bit the bonds? No one asked for it, but it gives a drive in the market. So whatever is happening in the bond market, it's of major. It's major actually. So US 10-year dip indeed. So big dip on the US 10-year future over here, down to 130. Can you see that? Yes, you can. Perfect. Down to 130.70. Okay. So that implies that decline in the bond implies to once again rising of the treasury yields. Okay. And that justifies the boost in the dollar. The dollar is higher and is higher because of the prospect on a of a potential sooner rate hike, even though I, it's something that it doesn't look likely for the moment, but FOMC minutes could give further light on that matter. But let's leave the explanation of the data aside, since we have covered everything, and let me continue with the assets that you want me to technically to check in the technical perspective, since we have managed to cover, I think, everything from fundamental perspective. upwards from the higher inflation. Yes, it's the prospect of a, it's the positioning or a pricing in, if you prefer, but potential of a potential. Actually, it's the safety of dollar people because now the worries in regards to the rising inflation have increased even more. The people are more traders are even more anxious in regards to what's going on in this rising inflation, so they are shifting to the safety of dollar. So that why the dollar is moving upwards, actually extending the gains that we have seen since the beginning of August here and Dushan. So let's get to gold since you keep asking. Okay, here it is. Intraday crossed. So the hourly candle finally closed just now, managed to close below the 20 period moving average in this 1 hour chart. So a big bearish candle, guys, indicating along with the momentum indicators that there is further steam to the downside. You can see MACD slowing down, stochastic still pointing lower, and is currently at 35 level. So one, so the next support level for the asset is at the latest down fractal, so 1754, and if that breaks, then this turns the eyes to the bottom of the range that we have seen the last 8 9 days, so the 1750. These two lines that I have just added are the next support levels for gold. Good to bounce to 1764. Uh, Not sure what you are saying, dear, but this is a big bearish candle. There is a lot of bearish pressure still, at least in the very short time frame. I forgot about earnings. We had a lot of big banks reporting before the market closed, so they might have already posted their earnings. Okay, we'll be back in a second with the earnings. Oh, okay, Stuart actually posted them on the Skype group tonight. So let me check them later on. So let's see. Gold, as I told you, 1754 and 1750 is the support area of the day if it managed to extend declines below this 200 period moving average. So yeah, you see that 1754 lies also with the coincides also with the Bollingers, with the 30-minute Bollinger Bands. So okay, Stuart just told me that JP Morgan beat expectations along with BlackRock. So far we have the earnings from JP Morgan. Don't forget JP Morgan is one of the biggest, actually, if not the biggest one, banks in the world. I think 7 billion market cap. I'm not sure, but yeah, both, yeah, in the US market. So both beating expectations. So if you are watching the stocks, if you like stocks, keep an eye on earnings, guys. Earnings season started, and is expected to be a solid one. So um, we offer a big variety of stocks, so you can have a look. So I will get back to try to open my MT5 and check to those two banks and their shares. But in the meantime, I would like to finish with everything that you are asking me about the currency market. So yeah, we are done with the gold for now. Big decline. Indications suggest further negative bias in the near term, bearish cross of the fast moving average as well. So a breakdown of the 200 period moving average could open the doors to the floor that has been sustained for the last 7 days in a row. In the long term, it is still consolidating. So it is directionless. We need to see either a break of this upper line of the range upper line at 1770, or either a break of the 1750 floor, okay, in order the goal um, to get a direction, sorry. Kiwi, okay. Aussie. Kiwi. Kiwi. Where's my kiwi? Come on. Okay. I don't want to waste your time. Let me just stick it. Kiwi. Okay. Oof. Aggressive selling, but that was anyway, that's something that has been triggered since this morning. Um, So let me just zoom out to see the overall picture. So 1 hour chart, a lot of selling since the beginning of the day, since the European Open, more precisely, breaking the 0.69 20 level. That was a floor that has been sustained since last week. This has been broken, and the asset it's pretty much presenting a turn to the downside intraday at least. So expanding, even though this has eased a bit, so stabilized a bit at 69.20 area, so holding this as a floor so far. However, the expansion to the downside of Bollinger's, along with the parabolic side in this 1 hour chart that they have turned above the price, imply to bearish outlook intraday and in the short term for the asset. So if we see further decline for Aussie, next support level intraday lies at the round 0.69 level. So round number now number, so 0.69, that it will be somewhere here, okay, or just a few pips higher, because we have a repetitive lower fractal. So 0.6908, just eight pips below the current price, while a break of the 0.69 level could open the doors to September and October lows. So that takes us down to 0.6960 or even 69, not 0.6850 territory. Okay, so keep an eye on um, um, uh, uh, keep an eye on this those support in this support, because a breakout of 0.69, as I told you, will open the doors to further selling, potentially to possibly to the October lows and September lows. So overall, the Kiwi's been under pressure since the beginning of September. You have seen a continuous decline, a bit of a knees and a correction, more precisely, in October. So sideways movement, but with big tilts to the upside. So this could we could say that up the fact that we have legs to the upside suggests that there might be a divergence. There might be more increasing bullish pressure, but I cannot really see that, because if you notice that the bulls are keep failing to close positively, and the sellers are managing to uh, to close the market every day for the last 5 days in a row close to the open price. So it seems that the selling pressure exceeds the bullish pressure. So it's not only about the tails of the wicks of the candles, but also of the body of the candles. So if the close price is close to the open price, that implies that sellers are sustaining the control. MACD is negative, keep like way below zero, RSI is below 50. So the overall the negative outlook it has been held for Kiwi despite this consolidation in October. So yeah, okay. By the way, in intraday, a recovery could be seen only if the asset managed to recover at least the 50% of the decline that we have seen today. So that implies to a return back above 0.6930 level. Okay, that was Kiwi, dear Quasi. Let's move on. We've seen about gold, seen about gold, seen about gold. Uh, I cannot advise what you do, Cody. Um, thank you. I used analysis on the 1 hour in my target. Okay. Okay. Hopefully, you have included some risk management on your on this position, dear Yogi. Gold again, guys. Come on, we have covered gold. Omar, when was that comment? It was 10 minutes ago. So I think you might were able to see that. No. Okay, just quickly. Next support level 1754, 1750. Overall directional less. So we have a question from Facebook. I was unable to open Facebook. It keep failing. So Aussie. Aussie. Someone's asking Milano. Oh, he's asking for Shman. He's asking about Aussie. Strongly correlated asset with gold. Aussie has been, where is it? Okay, here it is. Aussie has been seen in a rally. Um, has been seen in a rally in contrast with the strong dollar that we have seen, but it is correlated with the commodities, so that has supported the Aussie. So Aussie has topped yesterday at 0.7380, and we have seen a bit of a pullback today. However, it had managed to sustain and move above 1 month's actually at month's high territory. So the outlook remains positive as long as we don't see a turn back to, let me just this, so everything depends. I will just apply a very okay, actually, if the asset managed to close today below the, just be precise, 7330 level, which is the midpoint of this candle, this latest bullish candle on Monday. If it managed to close below that, just to be more precise, it would be better if we see a close. If we see a close below the 0.7320, which is also the 50-day moving average as well, then this will look like an evening star formation, which is a bearish pattern. Okay, but so in the daily chart, we have a bit of a pullback, but so far we're not really sure whether this is a correction, so some sideways move after this continues the rally that we have seen for 2 weeks in a row, or whether this will be a reversal signal. We need, as I told you, a decisive close below the 0.7320, so that will mean that a closure below 50-day moving average and a formation of an evening star. Okay, so let's wait and see. The outlook in the long term, it looks a bit uncertain. So intraday now, okay, big decline, but quickly reverse to the upside. So that's why I told you that it's good to wait a bit for the markets to calm down, for the noise to go away. Inflation, it's a volatile release, because anyway it's very important announcement. So and also over here, after bottom to 7320, which is my key support level in the daily chart, it quickly rebounded and turned back a few pips higher, around to 18 pips higher. So remains, however, below the 50 and 20 hourly moving average. So very neutral, I would say, dear Milano. It was a Facebook question. So keep an eye on 73.20 level as a support level, as a key support level. While on the flip side, the confluence on 20 and 50 period moving average is our immediate resistance area, because a breakout and a closure at the top of the hour above this level will imply to a recovery of the 50% of this bearish candle, and could turn the attention back to the peak of the day at 0.7360. Okay, Milano, if you're watching me, if you're still watching me, we are still here with us. What's your opinion about pound? Ooh, okay. Ooh. So, pound. Okay. Back to one other question from Facebook, maybe. Huh? Back to the 136.15, recover all the losses seen on the announcement, apparently. Okay, actually, I will not tell you anything about Bank of England yet. So, yeah, let me zoom out a bit. Let's see what's going on. Flattened. Can you see the clash of fast moving average, suggesting that this decline was limited, and the intraday, the short term sentiment the short term momentum is reversing. Okay, let me just. So if I connect the tails, there is an improvement over here since the beginning of the week. So okay. So let's see the 30 minutes chart, guys. Yeah, literally reverse all the losses seen on the announcement, not for the day, but rebounded. So let's see, where is it placed? Reversing the 50% of days gains, and it's back to 136.16. So anyway, pound overall, we've seen that pound is in general on bid, actually strengthening slowly, um, on the hawkish signals that we are getting from Mr. Ballet and in general the Bank of England, that they are really keen to rate hike within the year, in contrast um, with all the other central banks other than RBNZ, of course. So, and testing once again for 8 days in a row the 20 period moving average, even though it keeps failing to break and to close a daily session above the 20-day moving average. But for the day, pound remains in a bullish outlook, so supported. As you can see, that even that pullback that we got due to the data, it was higher than the previous one, so it keeps posting higher highs. So it seems that, let's shift to the 30 minutes chart. There is a rebound, but we're still 12 minutes away from that candle to close, so we cannot really confirm a potential rebound. So keep an eye on a breakout of 136. Let me just be precise. Let me put back my Fibonacci's, and on a breakout. So in 12 minutes, once the 30 candle close, on the breakout of 136.15, on a closure above that level, that it will brings back to the attention back to our attention a potential reverse back to the 136.40. However, RSI is still below 50. Stochastic is sorry, you cannot see that. Oh, sorry. So now you can. Stochastic has provided the bullish cross, suggesting that for the time being, in the very very short time frame, there is pressure to the upside, there is boost to the upside. RSI the same, stock MACD still negative. So okay, let's wait another 11 minutes for that candle to close. But overall, you should know, dear Ladele, that fundamental support in the pound, but we really need uh, to get it out of this range that we keep seeing the last week. Looks a bit, the medium term outlook looks a bit directional, less similar to gold, a breakout and a cross above the 28-day moving average, um, in order to signal further appreciation for pound. Sean, we don't provide signals. Good for you if you have achieved your what you were aiming with gold. Good for you. And what can I say? So you were hoping for a rebound. Okay, so I assume you're scalper. You're actually okay. 1 minute time frame. So you are definitely scalper. Okay, good job, dear John. Good job. Good job. Share with us your chart indicator settings and how you can use them. Dear Bruno, okay. Um, okay, what I have over here is the default settings of MACD, ATR, RSI. I have so stochastics with 5.3.3 settings for my short-term timeframes for less than an hour and 30 minutes setup. And these two lines that you can see is the 9 exponential moving average and 5 exponential moving average, along with Bollingers. I have Bollingers by default. Okay, I haven't changed Bollingers. But anyway, this setup, you can find this setup in our webinars. Stuart had a webinar called 5 and 9 exponential moving average strategy. So I think I'm not quite sure about the title, but it's it's an intraday setup. So you can if you check that webinar, you can see our intraday setup. Actually, Stuart's intraday setup, in which I found it very, very useful for the 1 hour and 30 minutes chart. So it's a 5-9 exponential moving average, Bollinger Bands default settings, MACD default settings, ATR by default, RSI by default. The only one thing that we have changed is stochastics, in which we have used 5.3.3. So 5. A 5 in a K period, and D period and slowing is at 3. The value is 3. Okay. Pound yen. Ooh, yeah. Yen crosses are like are keep rallying on the weaker yen, and pound was one of them. Pound yen and cap yen was one of the ones that they have seen an impressive rally, an impressive rebound in October. So what I think about pound yen, actually I replied to a question in Instagram earlier about pound yen. So pound yen is, what can I say? Outlook remains aggressively positive in the long term. You can see this appreciation. No, you cannot see it, obviously. Well, let me just set this up. You can see this strong rally since the end of September, breaking the uh, 1 to 3 months resistance area, and it's turning back to the 2021's highs seen back in May. So actually momentum is keep increasing, bullishly increasing and increasing. RSI keeps pointing upwards. This is a daily chart. MACD extending higher, stochastic the same. The asset and the candlesticks that don't look overbought yet. they keep extending higher within the Bollingers expanding higher. So the momentum, the bullish momentum, is still on for pound yen on the weaker yen. Anyway, is yields the key. We keep saying yields differential is driving the yen. Yen is very weak because there is a huge yield differential with all the major currencies. So the next a resistance area for the asset is up to 156 level, and the closer one is 155.50. Okay, these are the next resistance area as for pound yen. But what can I say? I give it looks like that technicals and fundamental keep supporting the pound yen. As I said, yen overall weak due to the yield differential. So remember, Bank of Japan pan lower for longer rates. This is their motto. Um, so while on the other side, pound and Bank of England, Mr. Bales keep stressing with the rate hike within the year, actually. So yeah, the fundamental perspective is supporting pound against yen. Technical perspective, you can see MACD increasing, you can see RSI increasing, and actually, if I just connect these lows, you can see rising RSI, rising stochastic, broken the 3 months resistance, and is aiming to reach the 2021 peak top. Intraday, similar, well supported by the 20 and 50 period moving average, sustaining a move within the upper Bollinger. So to the upside, today resistance holds at 115.492 is the upper Bollinger Band area, along with clashing with the latest up fractal. On the flip side, the 20 period moving average has been sustained as a key support level. Anyway, to be more precise, you can use the 50 period one. So it's at 154.30. The asset, the 50 supports the asset quite well. FOMC coming up later today. Do you suggest we trade with it or not? Okay. I believe that you should avoid noise, data, the noise of the noise of the markets. Okay. Any trading during releases, unless if you are a medium and long term trader. So if you're not like a 1 minute, 15 minutes, or 5 minutes trader, because if you are a scalper, then it might easily kick you out of the market. So keep to hit your stop loss very easily. Any kind of surprise in the markets or headlines in the news, etc., could easily hit your market. FOMC is not a volatile event. It's not a so volatile event if we compare it with inflation or NFP and etc. But it depends on what kind of trader you are. Tuluani. So if you're a trader, a day trader, or a weekly trader, you obviously won't be impacted by FOMC, because obviously the risk management that you have done, your exit strategy is well away from any noise of the market. Okay, so it depends. It depends on you, on your strategy, on what you are trading, what time frame you're trading, what exit strategy you have done, what risk management you have done, etc. So, yeah, that was pretty much it, guys. So, final call for questions until we call it a day, because I'm a bit tired. Let me check Forex news whether there is anything else. I haven't mentioned about the earnings. You are absolutely right. We haven't seen JP Morgan and the openings right now. Thank you, Stuart. In 2 minutes, actually. And let's have a look on. Where is my so Uh, Come on, come on. Fortunately, I don't have the MT5 over here. Oh, I was hoping to show you the the stocks. No, I do. Let me see whether it's. Oops. You can see nothing right now. Ah, I should have set it up in advance. I forgot about it. Unfortunately, I don't have my MT5, but we can see the stocks. But we don't have JP Morgan and BlackRock in the MT4. It's only on the MT5. So okay. Let's shift to USA 500 and USA on the the market just opened. So let's finish with stocks, guys. And come on, where's my stocks? Major US indices. Where are my major US indices? Over here. Cool. So on the open, crude slightly lower, 1%. Euro dollar 0.29% higher. Uh, Stocks higher. USA 500 rebounded on the open. Very welcome, dear Latike. Let's see what's going on. So, stocks on the, let's see. Oh, so JP Morgan, according on the Bloomberg TV, can see a decline on the open so far around 0.84%, even though it has beat expectations at 164.25. So slightly lower. Uh, so, okay. So let's see. USA 500 rebounded on the open 43.53. Key resistance area remains at the key resistance area. Further the appreciation could be seen at this tweezer double up fractals over here, but overall remains well below its 20-day moving average. So 20-day moving average, the real key resistance area to the upside for S&P 500. So 43.68. Key resistance area for USA 500. USA 30. Before I call it a date, let's quickly see how Dow Jones is doing. Still remains at the session lows. 34,400 remains within that territory. Rebounded of the open, but not significantly so far. So negative bias, as you can see in this negative bias prevails in the daily picture. Intraday neutral, flattening of MACD's, RSI failing to break the 50 bar, so a lot of consolidation is still on for USA 30. Last but not least, USA 100, a heavy tech index, rebounded on the open, posted earlier a move up to 714,775 highs, and the intraday momentum is increasing to the upside. So um, there is some support intraday, more an increasing bullish bias. Okay, but yeah. So next resistance area lies on 14,796 and 17,880, but we need to see. So let me finish like that. So yeah, the 50% and 61% and then key resistance areas to the upside. I have applied this Fibonacci on the decline on the pullback that we have seen since last Friday. So that was from me, guys. Thank you very much for attending. I can see that you don't have any further question. I'm not in a pair, Bilan. I'm on the USA 100. Okay. So next resistance areas at 14,800 and 14,851 level. Okay, thank you very much. Hope you're having a great day ahead, guys. And I'll see you again on Friday. Stuart is holding a live analysis. Explaining further then the banks, the big banks earnings releases, and to see what is expected next. Thank you very much. Like a weekly ramp up. Thank you very much for attending. Hope you are having a great day ahead, and see you again on Friday. Bye bye.